Hello everybody, this is my first video on the fundamental analysis on the Facebook stock. So basically the market is going down and there are a lot of cheap options there to consider. So I thought why not share my fundamental analysis on the Facebook. So this is just my opinion and no matter any of the view, because in portfolio the stocks should be added based on the different correlation, and for sure you'll seek the financial advisor advice, whoever you are following. But this is just my own approach. So the data I used in my financial analysis, I went to the SEC and website and grabbed the data from the 10K, right? So this is the place I use the data. Okay, so right now, and another thing, I have bought the few shares of the Facebook as well. I'm not a very heavy buyer, but just a minor share. And also another disclaimer here that I have a very small position in Facebook, but right, because I like to keep my portfolio diversified. Okay, so and the reason why I am long, or I bought the Facebook, and I'm trying to cover in this video purely on the fundamental analysis. I look into the not on the technical side. Okay, so I'll go one by one and share my analysis to you. Okay, so here are few when I look into the P&Ls of, I use the from 2019 to 2015, the 10K, and I noticed the revenue growth, right? So the revenue growth, you notice, is keep dropping, right? But still it's pretty large. In 2016 it was 54%, but if you notice, it's keep going. Now it's 27% in 2019, and I expect in 2020. So this is, I didn't take the quarter of the 2020, but I expect in 2020 as well, because of the coronavirus, the revenue growth might be a little low. Okay, but when I view the company, is not from the short-term perspective, always from the long-term perspective, right? Either this company can provide some value or not. Another, uh, I noticed that the cost of the COGS and the growth rate is quite stale here, but it's still very high. When I notice 51%, one thing I noticed on the COGS here is when I went to the SEC website, that there this COGS in there, it's not very clearly defined. Okay, so maybe I'll share that with you. The cost of, so you see here, right? So this is the, if you see here, the cost of the revenue is not that much, it's very small, right? But they group all this total cost together. In this one, it's the general administration cost of revenue is only 12,770, and these are in millions, so it's $12.7 billion, right? So it's consistently up. That's, I don't mind, and this looks pretty good, and they're able to increase it. And at the same time, they are doing quite good in terms of research as well, right? You see here, from the 2017, they heavily increase in the research, which shows pretty good that the company is still trying to put much money in the research and development, right? The marketing and sale is also quite heavy, so it seems like the company is also doing a lot of marketing and sale, and these are just general administration. One thing I find, this is quite heavy in general administration, and here you see is 2 billion, almost 3 billion, and then jumps to 10 billion. Then I notice what the hell is going on. But this general administration, when I look into their the description, is more like lawyer salaries and other consideration. So my judgment here is, what I got it, maybe it's because they have to pay a lot of taxes, in additional taxes in 2019, which they make. So maybe they have to pay a lot of to the lawyer, and my understanding is next year this will be come down as well, right? So then you'll see the drop in this one. So that's why I highlight this. EPS growth, again, this is 54.13 and it's dropping. It's a pretty big company, so I expect this in the coming next year it will be higher as well, not low. Okay, the return on equity, it's going, but it's still not bad. It's 18% this year. In 2016 it was 17. Seems like they make a good move. Then now I'm wondering why this is lower, right? Why is this is lower as compared to when they're steadily making the good return? Why the revenue is increasing? Why are dropping as well? But what makes this drop? So I noticed that, as you notice, the operating margin, right, the EBIT margin, as I show here, because of this this cost goes up, right, significantly, which makes the to 30 which makes that higher, the return on equity equity lower, because of the EBIT margin is actually lower, right? And that's why the return on equity is lower. Otherwise, if and if you see, there is not much change in the asset. Okay, so an asset on the asset turnover, management is doing quite well, and it's pretty still over 50%, right? It's a little bit lower than last year, but is if you compare before that. So asset turnovers basically, right, is how efficient they are using the asset, and the financial leverage is 1.31. So still have less levered, right? It's not bad. Only these things come out. Okay, so far I notice, okay, these ratios are quite decreasing, but if I keep this noise aside, and I assume they will come back in within 1 or 2 years. Okay, so that's my take on that one. Okay, so let's see. So this is from the P&L, right? So okay, so revenue, okay, they are getting. So let's say some how they're doing from the under cash perspective. Okay, because now these days, because of the coronavirus, the company need to be have good cash, right? Otherwise, my expectation is they won't survive. There will be a liquidity issue. Okay, so here this is a current ratio, which is very well, like over 1.2, right? Current ratio is, this is the current assets and divide by the current liability, right? So and next is I take the quick ratio, right? Quick ratio is over 4, which is amazing, right? This is right. And then if I go more conservative, I'm surprised. A lot of cash. This means almost 4 times, right? 3.6 times in 2009. But if you see from 2017, it's consistently dropping, right? The cash is dropping. But still, if you notice, maybe it's still very good, right? Is 3 times, almost 4 times higher than their liabilities, right? So that's good. So on the liquidity side, on the short term side, which give me the confidence that it won't be affected by the coronavirus, right? So they have enough cash flow in hand. And I also noticed their trading cycles. I think the cash conversion cycles, I'm not sure if I'm sharing here, but on that side as well, I think they're pretty well as well. I didn't see any concern. So let's say how much. The next is I always looked on the cash yield or the cash flow, where how much money is actually company is generating, right? And these are the few. So return on assets, I'm using here using the cash flow, right? So you see this is 31%, right? 31%, 30%. So this is very good. So this is the return which on the company cash flow the company is generating on their asset, right? 30% is basically they are generating from that perspective. And now when I compare with their total debts, right? Not only the short-term debt, the cash flow which they have compared to the debt. So this means even if they write off their 1.2 times, right? So it's dropped significantly. If you notice, it was in 2016 again 3, 2.5 is stable, but this year is 1.2. So I think 2019 they have to pay a lot in the taxes. So that's why it's a little bit lower. But I assume next year they will catch up, right? It's in their SEC. I have read. So they have to pay 2 billion and 1 billion somewhere. So 3 billion they have to pay. So if I add that back, so I think then the next year they will catch up or even on the same side, right? So then I think it's pretty good. Okay, so the price over cash flow is per cash flow is 11 times, right? So which is not bad, right? So it's 11 times nothing. And the cash flow yield, right? So the how much yield, the cash yield they are generating, right? So which is 8.6%, and it's consistently increasing. Good thing is they're increasing more cash, which I like it. And free cash flow, right? Look at this, is dropping, but it's still not bad, right, as compared to the price. Okay, so I bought this the stock when the price was quite low. Maybe I don't say that, but and the next is maybe right now I think the stock is trading around 200 something, but so this is but I bought it a little bit uh, lower on the I bought it lower than that, so I'm quite happy to make the decision. So now I looked on the balance sheet and the P&L cash flow statement. From there it looks very healthy from the fundamentals, right? But now my next concern is, okay, what about its growth, right? How they are doing the growth. So and one more thing I also checked in the, before I go to the growth, the segmentation of their revenue, right? From where, how much, from where the revenue is coming. So I'm not sure if you can able to see clearly here. Let me expand this one. Hopefully this is clear now. So this is their revenue worldwide, right? So if you notice, this is a quarterly basis, okay, and then this is the in millions, right? It shows in million, 25 million now. So it's keep increasing, right? So revenues keep increasing, right, on the worldwide side. Now the next is I want to see, okay, which dimension or which region the revenue is increasing or decreasing. And I'm quite surprised that in every region you notice the revenue is increasing. For sure they mention is their mature market is the USA and Canada. So you notice it's quite high, $10,000 in millions, right? So 10 billion, and it's quite high, right? But if you notice on Asia Pacific and Europe, right, and this one in the rest of the world, right? So this is still increasing, right? And average revenue per person is also good. You notice this, right? This is average revenue per person, right? And I'll share one more things here. The rest of the world, I believe, let's say I noticed they have a partnership which they did with the India Reliance company. It was in the news, so I'll share here. Here you go. So Facebook is in the CNN, right? Facebook is spending 5.7 billion to capitalize on India internet boom. I think this is a quite, in my opinion, quite good in terms of the deal, because Reliance is a huge giant industry. They are in every sector, and they have want transforming the digital India and using their Reliance Geo platform. And Indian market are huge. Every people mostly there has 2 or 3 cell phones. They're doing more. So if they can monetize on their sell the ads on there, so my expectation is this $2,000 maybe is on rest of the world. It will soon maybe surpass $10 billion, because nothing, and the share price will skyrocket that time within a few years. Okay, so that's what my prediction on that one, just on that. And again, they have a huge cash flow they are investing in, and also it's not only that, but their user community base is also growing. Look at this. This is from their again SEC document. Okay, you can see there Facebook daily active user is 1.66 billion on average, and it's increasing 9% every year. You see, monthly active user 2.5 billion as of December 2019, and increased by 8% year over year. So it's keep increasing. Daily active people, you see, it's 2.26 billion, right? It's an increasing 11%. So it's a huge market, and average revenue, right, per person is, again, the revenue worldwide is increasing. If you see, per person is 346, before it was 269, and after, once they start working, I think within 1-2 years, and Reliance and Jio, I believe this will be skyrocket. Okay, one more thing I want to share is a daily active people activity, right? So this is how they define DAP, right? So daily active people. So you see 2.26 worldwide DAP increase 11%, right? 2.26. So is very good. So after considering this future growth and solid financial statement, I recommend that this is good. And I also did my present value using the future cash flow. I don't want to share that big, maybe I don't want to wrongly impact that this is my price and all. So, but other than that, I think this is a very good deal. So I'll give a thumbs up to buy on this. So let me know your comments, and what you think about it. And if you want me to cover any other security in future, please do share with me, and I'll try to cover that as from the fundamental perspective, and give my opinion. And this will be fun as well, so you don't have to take, or I like to, especially now these days, I have some time, and I'm also interested in buying some securities. So, or if I find, or just analyzing it for fun. So hopefully you like my analysis, and let me know what you think. And last not the least, if you like, please do subscribe to my channel and give a thumbs up. Okay, and thanks for that your time to staying here. And on this SEC link, I will put a link in my description, so you can go there and read it. Okay, thank you very much. Bye for now.